It's 8:26.
And the price of oil has gone up after members of OPEC, which include some of the world's leading oil-producing nations, agreed to cut production for the first time in 8 years. Wake up to money. Sean Farrington is here. Morning again, Sean.
Morning. Yeah, we've had petrol prices, haven't we? They touched below £1 a litre at one point when the oil price absolutely plummeted to pushing towards $20 a barrel. But it's back up now towards $50 a barrel, after we heard last night that these nations had agreed to cut in production, something that we haven't heard them say for quite a while. The oil price went up by 6%. So could this mean that, well, we're looking at unleaded now, you're getting about £1.12 a litre for unleaded. Could this be the start of a nudge upwards for a continual period of time? Steve Irwin is from Portland Fuels, which is a wholesale fuel provider. Good morning, Steve.
Morning, Sean.
How much of a knock-on effect does a 6% price in oil have potentially on the petrol price?
Well, we've seen the price rise last night, but we have seen it drop off a bit earlier on in the week. So the actual rise that we're seeing so far up until this morning is only about a half a penny increase on the prices at the end of last week.
We saw the price of oil going down towards $20 a barrel, and that meant we got those cheapest levels of petrol prices that we'd seen for a while. Do you think those levels will return?
It's unlikely that we'll see prices back down at those kind of levels. I think $40 to $50 is about the kind of a range that we can expect to remain within, certainly up until the end of the year. We've got another OPEC meeting at the end of November where they're going to flesh out some of the details of the agreement that they reached yesterday. And until the 30th of November at that meeting, then the market's really waiting to see exactly how they're going to implement this market cut.
And for people with jobs in the oil industry who, again, they hit them very hard when the oil price fell, are we now stabilising at a level that means that companies could grow and people's jobs might be a bit more secure?
Yes, absolutely. And it's more so in the United States where we've got shale oil producers who are very nimble. They can react very quickly to these price rises and short-term price rises, which is all we expect this to be. Because as the price increases, they will come back to the market, add a bit more supply, which will put a cap on how far these price rises can go.
And when we see the petrol price now, as I say, just around $1.10 a litre, could we now be looking set for, as oil stabilises, petrol prices nudging upwards?
Yes, they will certainly nudge up, but I don't think they're going to nudge up back to the really high levels that we were seeing a couple of years ago. So I think £1.30, £1.40 is out of the question, certainly in the short term, but we might go back up to the £1.15, £1.20 kind of a region at the top end.
Steve, thank you very much. Steve Irwin from Portland Fuels.